Oil stocks. Buying oil is kind of a slippery slope right now. To buy or not to buy? That is the question. I will say it again. Demand moves oil. Let's talk about that. People working from home? No demand there. Not as many people traveling on planes or cruise ships. No demand there. We still have a big supply of oil. No demand there. So when do you know when it's okay to buy? Do you want to learn how to pinpoint the most opportune time? Let me show you right now. Oil, woo-wee, oil, oil is a slippery slope. It really, really is. And I'm looking at stories like this. U.S. oil falls below $40 as demand worries stump big draw. What have I always said about oil, Joey?
Supply and demand.
Wow, do you know?
Demand drives supply.
No, demand. Wow. Oil is driven by demand. They're typing it in the room, Joey?
No, I was reading this.
Oh, okay. Oil is driven by demand. Demand drives oil. All right, so we're looking at oil falls below $40 as worries draw. All right, worries stump on a big draw. Now look at this. The benchmark price of U.S. oil settled beneath $40 a barrel, and this was on Thursday. This was last week's story. When was this done? July 30th. All right, snapping a support level critical to longs in the market as traders brushed away a big crude draw reported by the government on Wednesday to focus on demands worries sparked by COVID-19. So I'm going to talk to you. I'm going to help pinpoint the right opportunity to get into oil. I've got another doom and gloom story about oil. Big oil companies lose billions. How many zeros is billions? A lot, but not as much as trillions, right? Not as many. Huh?
3 less.
It's 3 less than trillions. Prepare for prolonged pandemic. 2 stocks make the news here, Exxon and Chevron. But as I mentioned, I'm going to help you to pinpoint the exact time to get into oil. All right, they joined procession of oil giants reporting dismal second quarter results as the coronavirus continues to reduce the world's thirst for oil and gas. Why is it being reduced? People are not driving to work. People are not flying on planes. Cruise ships are not running around. There's a lot less demand for oil. It makes sense. All right, it does make sense. So those are 2 doom and gloom stories about oil. Let's get back into the software real quick. My 2 stories were Chevron, Exxon, and then I'm also going to bring up WTI, W&T Offshore. That's what I look for in order to time oil. All right, I use that to time oil. Let's analyze these. CVX, overvalued, trading at 87, value of 67.48. Looking at Exxon Mobil, trading at 43.58, value at 39.20, overvalued. How about W&T Offshore, $2.37, where I got a value of 51 cents. Ooh, let me put that in there. Ooh-wee. And then, good googly muggly. That's way overvalued. Let's analyze them. Upside potential on CVX, below the value of 1. Not a good long-term play. Exxon Mobil, RV below the value of 1. Not a good upside play or long-term play. And W&T Offshore at 26.26 on relative value. If I look at RV, RS, and RT on all 3 of these stocks are not fundamentally sound and they are not going up in price. I really shouldn't even have to look at the graphs, but I will. All right, because I'm going to pinpoint for you the exact time it is to get into oil. So demand is low. We still have an oversupply. We're still digging into that supply. Demand is going to catch up. Don't get me wrong. Oil will start going back up again at some point in time. It's going to happen, all right? But Chevron did form a level of support. Let's go draw me a line. Did form a level of support. This is, remember the story just said that. Form the level of support style. Let's make that a little darker. Look at that. Chevron did, and it is serving still as a good level of support. I like it. The 3 and the 8 are about to cross. Keep your eyes on that. Same thing with Exxon Mobil. Look at that level of support. Man, it seems like that whole industry is bouncing off a level of support. Look at that. Nice sideways move. This is the ticker symbol that I'm going to help you to use to know when it's the right time. Because I track oil as a whole in WT Offshore, this is U.S. exploration production for petroleum. Notice there's its level of support. The VectorVest software drew it for you, sitting at a value of $2.18. That is the current level of support on WTI. This is the little secret, though. Number one, the stock is in a channel. Let's get it out of a channel. See that level of resistance and that level of support. Number two, the 3 and the 8 have crossed, but I got a down day today. Preliminarily on the 3-8 cross, good short-term way to get in. When the 3-8 crosses back down, good time to get out. You do that time and time again, you can make money on WTI. All right, number 3. I want this indicator, RT, to go above 1. That is going to be your strong confirmation of when it's going to be a good time to get into oil. When WTI, the 3 and the 8 cross, which they are right now, let's see what happens after today, comes out of this level of resistance, which is sitting at $2.60, and followed by RT going above 1, bang, zoom, pow. What was that, bang, Batman? Don't you remember that? You're too young to remember Batman with the bang, zoom, pow? How old are you, like 12?
Yeah.
Okay. Anyway,
12 and a half.
12 and a half. Wow, you're almost 13. Oh, boy. Oh, boy. Anyway, that's, I think, is going to be your jump-off point on when it's okay to start to get back into oil. So there you go. That's it in a nutshell. That's going to be a good indicator to help you to make that decision. All right? So that's my little tidbit of information to help you.
Bang, zoom, pow was the honeymooners.
Oh, that was. Oh, yeah, that was the honeymoon. I do know what I'm talking about. It was the that was the honeymooners, but that was Batman too.
Bang, pow was Batman.
Whatever. Any questions, Joey?
Is there a way to see which stocks are keeping VVC negative today compared to the other indices?
The question is, can we see what stocks are keeping the VectorVest composite negative today as compared to the other? No. I can see all of the stocks that are going. I can run a search and show you all of the stocks that are going down today. I can do that, and that would affect the VectorVest composite. I can run a search of all of the stocks that are negative. Let me do that real quick. I can run a search, new search, where oops. No, new search. I don't want to save this. All right, stocks, price. Actual, less than, common, less than, oh no, that's not what I want. Stocks, not stock, price. Let's go percent price change. Yep, percent price change less than 0. If I run that, I can run a search that finds all of the stocks in the database that are down today, every single one. All right, if I look at all, how many stocks will that give me? It won't tell me. It won't. I know I've exceeded. It won't tell me. But here's all of the stocks in the database that are going down. So that's the only way I can answer your question. All right. Oh. That's the only way I can answer your question. So if they're going down out of the 8,200 stocks that we tracked, then that's definitely affecting the VectorVest composite. Hopefully that answers your question. All right. Any other questions, Joey? All right. So the question is, why do I use a 3-month graph? What happens every 3 months on a stock? Earnings. What's the biggest mover of a stock's price? Earnings. So if I'm looking at a 3-month graph, I put earnings on, earnings will normally show up in the picture somewhere, especially if I know that earnings is the biggest mover of a stock's price. I think that's more than enough information. Now, if you're a longer-term investor, you want to put on a 1-year graph, you can do that. You want to put on a 5-year graph, you can do that. The only time that I really look at a longer-term graph is if I know that I'm in a longer-term stock like, everybody knows what I'm getting ready to put on. If I'm looking at Apple, that I will look at on a longer-term graph. Who asked that question? Whoever asked that question, that's a great question, but I'm going to put on a longer-term graph on a stock that I know that I'm trying to hold for retirement, Hopefully that makes sense.
Twinine?
All right, who?
Twinine?
So hopefully that makes sense. Or if I look at something like Microsoft, same kind of deal. Look at it, yeah. Or if I looked at a company like Tractor Supply, take a look at that. Now you understand. Now these stocks, I'm looking at a 5-year graph on. That makes sense on these kinds of stocks. There's Microsoft, Tractor Supply, not nearly as smooth as the other two, but look at that Microsoft. Good garden gin. You gotta love that. That's where I would look at a way longer term graph. But a lot of the stocks that I'm looking at right now, because of the type of a market that we're in, 3 months is more than enough information to let me know. Is it moving from the bottom left to the top right in a 3-month graph time period? I can jump on it more so for a swing trade, a few days to a few weeks, couple of weeks maybe, more so than looking at a longer term play. All right, good question as well.